The MIT found something shocking. Despite a $40 billion investment of companies into generative AI, 95% of those companies were actually making zero in return. Matter of fact, Google just announced last week that they had their first negative free cash flow since their IPO in 2004 due to their heavy investments into AI. So you tell me, does it really make sense to invest billions and billions of dollars into a complete new technology just to replace a low-wage worker? The main question then becomes, why are companies actually doing that? Share your opinion in the comment section down below, as I would like to see the variety of opinions on that topic. In this video, we will talk about the current challenges in AI and why disruption is still low, although the adoption is high. So from my point of view, it's safe to say that AI is not making the impact that everyone expected it to. And still to this day, a lot of companies are overvalued in the stock market, such as Supermicrocomputer, Tesla, or Palantir. I hear already that a lot of people will say, those are growth companies, it will become much bigger in the future and stuff like that. Let's just take together a look on two metrics. One is the P/E ratio, which is price to earnings as it is today. And the second metric is the future P/E ratio, which looks at the price compared to its possible future earnings. For Palantir, we currently have a PE ratio of 140.35 and a forward PE ratio of 246. For Tesla, we even have a much higher PE ratio, standing at 290.77 and a forward PE ratio of 209. So these two metrics actually tell us that as of today and over the time period of the next 12 months, this stock will probably be overvalued. I chose to talk about these stocks because they are heavily related to artificial intelligence. Especially when you talk about Tesla, you immediately think about robotaxis, and Palantir is a totally story of its own regarding AI technologies. But then the real question becomes, if those two companies are adopting AI technologies with that fast pace, why is AI still struggling, or why don't they make much more in return of their investments? Well, Tesla and Palantir are only the tip of the iceberg, if you want to say it like that. We should look first on the generative AI providers such as OpenAI and Anthropic. I brought a graphic with me to show you in this video, and you can see over here that their cost for training and inference will grow almost 10x from 2025 to 2029. And in the case of OpenAI, their internal analysis and forecasts say that they probably will not become profitable until 2030. And these are the two strongest AI providers that are out there at the moment. And even they have the struggle to control their internal cost and to get a lasting profitable revenue stream. I repeat it, we are not just talking about companies that use AI. We actually saw that companies who are offering AI technologies to the market, which is their main model to create lasting profit and lasting revenue, they are struggling with their cost structure. So what has every company to do in these specific situations? So first of all, they have to increase their sales volume, right? And to do that, they actually need to think about more AI fields of application which they can again offer to their customers. So for that, they have to optimize their services on a constant basis. Now, we talked about generating more revenue, but one of the key challenges is not to generate even more revenue, it's to control the excessive costs which AI solutions currently have, for example, in the energy field. Actually, there are so many different reports that have a common ground when it comes to energy usage in AI, which is if you want to scale your AI solutions, you have to provide much more energy. And in addition to SpongeBob with more energy, every new technology will be regulated even more over time. At the beginning of AI, we saw less regulation, but down the line it will increase, like ethical AI or strict regulations for data centers. So for example, there are currently many governments that forbid to place data centers in their countries because it has a high energy usage, it has a high water usage, and it's not that friendly towards the environment. Now, if you try to just remember back to November 2022, when ChatGPT was introduced first, it was such a new technology because the first time in human history, you had to deal with an intelligence which was not of human origin, right? All of a sudden, we had an intellectual partner that we could talk to which was not human. And this opened so many possibilities in the minds of the people. And that's one of the main reasons, because it's also a prestigious thing to become the leader in that topic. And that's why the biggest companies are fighting for that number one spot. But whilst they do that and invest billions and billions of dollars into that, they are forgetting one thing. AI and artificial intelligence is not like traditional software. And traditional software is what made them rich in the first place. But it had a total different business model if you look at its core. A prime example for what actually happens if you try to adopt AI technologies, Google experienced just a few weeks back. The first time in history since they were listed in 2004 back in the day, Alphabet had their first negative free cash flow. Because as I said, implementing artificial intelligence technologies have much more challenges than being a normal software company. Because for you to be successful with AI, it's not just enough to build some software, release it. You need data centers. You need physical infrastructure, better said. And every additional user which uses your technology means actually much more computing power. And this means in consequence more data centers, more electricity, and more cooling capacity. The industry sees the potential and therefore is investing billions of dollars up front, because the technology is so intriguing that everyone wants to be at that pole position. But the main question still is, are there any lasting business models for the industry? From a business development perspective, which is my core profession, I just have to tell you that a software company is a total different ball game than an AI company. Because with a software product, you can scale actually much more, right? You can distribute it much easier. And if customers actually want to consume your service, you don't have these type of exponential costs, which is seen with AI. And this is actually what's so difficult at the moment for companies to find business models in the field of artificial intelligence where the people are actually ready to pay the premium to get much more out of it. And here we are actually diving deeper into how companies actually can get more revenue out of the AI technology with their business models. I've actually read numerous scientific research papers on this topic, and most of them say almost the same thing. AI, if you look at it, is like let's say a primary general purpose technology that improves existing products and processes. But what AI doesn't do most of the times is to build a complete new product or to offer a complete new service from scratch. So most of the times a running business, wants to adopt AI technologies to cut costs, right? Or to get better in their processes. And in the best case, AI comes then in and cuts costs, at least in theory. For example, if I had to make an example from my own life, it would be, I have an e-commerce shop for Turkish coffee, as some of you may know who follow this channel. And what I struggled with was over the last years with organization, and I've implemented intelligent agents with N8N, for example, which then replaced down the line my support staff in the company, because it was just overhead. And nowadays, what those people did in 2 to 3 days, the agent does, in matter of fact, in 2 to 3 hours. This is just a small example on how it could enhance a business. And if it really helps on an enterprise scale and if it cuts cost, this is a total different story. Actually, what many companies miss when they talk about, I want to adopt AI technologies, is you need to have complementary assets to use AI. As I said in the beginning, AI is not like a standalone solution that can just do magically everything. It needs an input to create an output. And most of the times, to create an output or to get, let's say, better sales forecasts for your company or deeper analysis, you have to actually give the AI the data it needs. And in most companies, unfortunately, the data structure is so bad that even AI can't do magically everything with it. As I said, we call those complementary assets. And these could be like, as I said, having a good data quality, already have a successful customer base that an agent could mail every week and then schedule meetings back and forth, or that you have already running processes. It doesn't matter which type of process, but that you at least have some processes in place that an AI can analyze, or that you have an IT infrastructure. Most of the entrepreneurs that I know, or the small firms that I work with as a consultant, they don't have real processes in place. They don't have a real IT infrastructure in place. They still use just basic stuff like Google Drive and stuff like that. They don't have an ERP system and stuff like that. So it's really difficult with almost no systems and almost no data to use AI, to be honest. And that's exactly something another MIT study found in 2025. They saw that the adoption of AI was really high, but the disruption was very low. So innovation wasn't made. Impact on profit loss wasn't seen, at least for 95% of companies that were conducted in the study. And if we just compare that to the internet, which was back in the 2000s a big thing, most of you heard of the dot-com bubble, and we can see that right off the bat, the internet was a disruptive product. Or better said, you could at least build disruptive products with this technology. For example, as you can see with Mark Cuban, who just made his first billion by selling off his streaming company to Yahoo back in the day. And this was actually what the internet enabled him to do, a standalone product that people could stream sports around the world over the internet. This was totally new, and it was a unique selling proposition which didn't exist, which wasn't that expensive, so it was actually cheaper than having 10 different subscriptions on TV back in the day. So a lot of people moved to digital, and it was just more convenient. But you don't have the same factors as this example shows with the internet. You don't have the same factors with AI at the moment. And that's quite unusual, to be honest, because AI is like a hype train, and everyone is jumping on the train at the moment. I see it everywhere. If you look on YouTube, if you look on LinkedIn, let's not talk about LinkedIn for a second, but yeah, let's keep that aside for a moment. But when you actually see how people try to talk great about AI, what AI actually can do, you really question then, okay, when everyone talks about that, where is the actual innovation? So at the end of the day, we can say that AI has 3 layers of challenge. The first layer is that AI is not a standalone business model. We talked about that. Most of the times, and this is the second challenge, AI needs complementary assets. And the third point, which is really important at the bottleneck, AI creates much more costs at scale. And if you now compare just the dots with the things you learned, you'll actually see that a lot of stocks are unreasonably overpriced at the moment. So the main question becomes then not if a crash happens, the question becomes when does it happen? So before you actually decide to invest into AI stocks and jump on the hype train, just take a few minutes, look on old school metrics like the PE ratio, the future PE ratio, and look on the business model which is behind the company, behind the products. Where are the unique selling propositions? Are there actually customers who are able and willing to pay for that service? Matter of fact, I've just started a complete new investment journey just a few days ago. If you're interested in how I navigate through tough times in the stock market, just let me know in the comment section down below. I created like a new account to share this experiment with you, and I plan to share a small update on this complete new account just for you, where I plan to spend around $600 to $700 a month into different ETFs. If you're interested in that, I know it's not that interesting like day trading, it's more like value investing, it's more boring, but if you're interested in that, let me know in the comment section down below, and I'm happy to shoot a video on that topic as well. So as always, thanks for watching. I see you next Thursday. Bye.